Hello and welcome to this Embark video where we're covering off the 7 key causes of poor cash flow. You would have heard cash flow is king, or cash flow is the bloodline of a business. Quite often though, people don't understand it or people don't look after it as much. So we're going to go through the 7 items fairly quickly, just to give you a flavour, but they fundamentally link into a number of different videos that we have done or looked at previously. So number 1 is the inadequate accounts receivable process. So here we're talking about your debtors days, so how long it takes you to get paid. And quite often they're higher than it needs to be, so it takes longer for you to get paid than what it should. Now, we've done videos in regards to talking about your terms of trade, how we can shorten the time period that from when you do the work to when you get paid. So this is about invoicing regularly, it's about having the shortest work as possible, it's about not having 20th of the next month payment terms, having 7 days or payment on pickup. There's a few key things, business dependent, so this is all dependent on what your business is, but generally speaking there's something we can do from the accounts receivable process to improve it and make it more efficient. And generally speaking it's around billing more regularly or changing your terms so that it's not the classic 20th of the next month. Progress payments or deposits are also a great thing to do from an accounts receivable progress. The second is underutilising accounts payable process. So quite often when it comes to small businesses, they say, when I receive a bill, I pay it because I just don't want to forget or don't want to have to deal with it. Super common, and totally understand it from that point of view. But what that means is that you're giving your cash away, you're paying that bill sooner than what you need to. So if you're on the 10th and it's not due until the 20th, or sometimes 20th of the next month, then you're paying that out 10, if not 30 days earlier than you need to, which that hinders your cash flow of your business. There's some key things in there that we can help in terms of your accounting system, actually having a full AR/AP system in Xero, and that's using HubDocs. We talked about that as well in terms of what you can do, something well worth looking at. But holding on and delaying that payment, not outside your payment terms, but just paying it when it's due, can make a significant difference to your cash flow. The inventory process is your next one. So obviously if you have stock, quite a few businesses don't, but this is carrying stock or work in progress for too long. So this is when you're buying a whole lot of stock that you don't need because it takes you 6 months to sell it. Now, once again, it depends on the products and what you've got, but fundamentally you want to shrink the inventory process. So you're not holding, so you don't have obsolete stock, but you're not holding a whole lot of stock that you don't need, because obviously you've got to pay for that stock and that hinders your cash flow. Now in the current environment, we're talking about COVID here at the moment. I know that there has been a massive blowout in terms of not being able to get supplies as quickly as possible. So people are, generally speaking, holding more stock than what they would normally, but that is definitely something that you want to look at as well if you've got cash flow issues. 4 is the inappropriate debt/capital structure. So this is basically what we're talking about here is in terms of how you've funded your business. Have you done it in a sensible way? And the classic one is, are you using high interest loans when we don't need to, or is there a way that we can modify the debt so you don't have massive capital or massive loan repayments? Because if you've got big repayments going out, that can obviously impact your cash flow. Sometimes you can't do too much about it, but it's definitely something worth looking at. I had a client recently when we were talking about they were able to look at significant growth opportunities because the business purchase was basically self-funded, so there was no debt repayments going back to the bank, so they didn't have massive pressure on their monthly repayments, which allowed them to look at other opportunities. So there's definitely a few things we can look at there. Overheads too high. Well, this is just running the business from that point of view. If you've got significant amounts going out from an overhead point of view every month that fundamentally aren't needed, then it's worth looking at. For example, if you're leasing a building and you're only using half of that building, then obviously you're paying out amounts that you don't need to, maybe for no reason. There might be a good reason for it, but can you sublet that? Can we look at other ways to use that expense? So overheads isn't something that we fundamentally focus on, because it's, generally speaking, hard to squeeze too much out of it, but it's definitely something worth looking at every year or biannually from that point of view, to make sure that you're not overcooking it in any different areas. Gross profit margin is too low. So this is basically, the gross profit margin is what's left from the sale after obviously the cost of the good that you are selling. So if your gross profit margin is too low, therefore you've got to crank up your sales to cover your overheads. And if that profit margin is incorrect, therefore you're going to struggle from a cash flow point of view, because you're fundamentally paying out for all these goods, but you don't have enough to actually run the business. And 7 is kind of like in terms of sales levels too low. So do you have the turnover that you need to have the business run? So we've kind of covered off in different videos, 1, 2, 3, and we're talking about 4 at the moment. 5, 6, 7, we're definitely going to dive into and hopefully play with some working examples in terms of what that means and how you can look at your accounts and go over that. Cash flow is king. It is a lifeline of your business. It's definitely something that you need to understand and look after. So if you are wanting to have a conversation about it, or get a second opinion, or have someone look over it, sing out to us. Let's go and have a chat and see what we can do. You're not going to look at all 7 of them. There will fundamentally be 1 or 2 of these, the low-hanging fruit that you can focus on, and it should significantly change what you're doing. So if you're unsure, sing out. Let's have a look. But hopefully you found something useful, and therefore, thanks for watching.